Wait. Now we're live.
Now we live?
Yeah.
Okay. Okay, everyone. Welcome. Thanks for coming. How many people are familiar with the Tone Bass and his work?
Awesome.
All right.
Almost everyone.
Okay, so I think he needs no introduction. Let's get straight to it, right?
All right.
If everybody
Thanks.
knows you.
All right. Thanks, Anders. Great to be back in LA. It's my second time doing this meetup. Am I the first returning guest?
You are.
Ah, awesome.
And thanks for coming.
Great. Hey, thanks everyone for coming in. We thought about what would be best to do today, and the idea was let me do my standard daily market analysis. I know people were waiting for it this morning, but that's okay. We're going to do it now, and then all the Q&A would be done with you guys here in the audience. So if you are watching online, I'm not going to be taking Q&A from the video audience. And all the Q&A will be here, and the Q&A is open, right? Like you don't have to ask about the price. Gonna do like an Andreas style uh, meetup where it's mostly Q&A. All right, so for the traditional markets, I'm going to screen share, and the same thing is up on the big screen, and we go from there. All right, so my usual open disclaimers. This is a podcast about trading, and it's trading education. Everybody hears me okay in the back? All right. Uh, and it's a trading educational podcast. So I encourage everyone to go to my website, go to the educational tools section, find Learn Trading, and there is lots of information here. I focus on section 6, which is a little bit more advanced, and there's lots of links here that explain all the rules of my indicators. And for additional information, I have a consulting section. And of course, I just did a where are my seminars, trading seminars? I just did a seminar here in LA on Saturday. That worked out really well. Anders was there. A few other people were there. Raise your hand if you were at my seminar. Oh, just two of you. Oh, one more. Yeah, that's right. Danny, you were there as well. So a few people were there. Great. Thank you for coming out again tonight. My next set is in DC, New York, and San Francisco. All right, let's jump right onto the markets. Actually, before I go to the markets, an interesting tweet just came across my radar. Somebody specifically tagged me. They didn't actually just tag me. They tagged Roger Veer and Adam Back and Francis. So the rest of the guys are Bitcoin maximalists, except for Roger. And here's what the tweet says. Apparently, this is from Microsoft, and it says, while some blockchain communities have sorry, while some blockchain communities have increased on-chain transaction capacity, example block size increase, the approach generally degrades the decentralized state of the network and cannot reach the millions of transactions per second the system would generate at world scale. To overcome these technical barriers, we are collaborating on decentralized layer 2 protocols. So again, like a lot of us knew for a while now that raising the block size is not going to do anything. It can only cause more harm than good. Besides the fact that it would be impossible to raise the block size safely, it's obvious that any kind of block size increase would lead to a fork in your coin. Uh, Even if it didn't lead to a fork in your coin, having a bigger block removes your decentralization. It makes the coin way more centralized for several technical reasons I'm not really going to get into unless somebody wants to ask the question in Q&A. And it's great to see that other prominent companies are saying the same exact thing. So that's good to know. All right, let's talk about the markets. So here is the weekly chart of Bitcoin. And in my last video, I'm going to back up a little bit, talk about the way up because we have a studio audience. How many of you in the audience are traders? How many of you trade Bitcoin or other? All right, good. That's like almost half the audience are traders. That's perfect. Okay, now how about this? If you're trading crypto right now, raise your hand. If you traded before crypto, keep your hand up. Okay, that's actually that's the majority. That's good. So some of you were familiar with trading before crypto. That's a very good thing, actually. Okay, so I'm going to back up in a minute, but I just want to talk about last time I did this video, I drew this box. And I specifically said that the price of Bitcoin really needs to go above the, the high of last week's price. So we need to break the top of last week's candle. And the top of that candle was $9,090 on Bitstamp. So we have to break 9,090 this week in order to consider this as a true reversal candle. Okay, so that's what we're all waiting for right now. At least I am. Let's back up. Let's talk about this recent run up. Because people still keep asking me about this giant red arrow going to 1300 as to why. There we go. A little cleaner. Okay. So we had this unprecedented run in 2013 that led us to about the 1250 area. I believe the high in the price of Bitcoin was $12,042 or so. And it so happened when the price of gold fell to 12,040. So it was really funny back then. I remember the day when the price of Bitcoin was greater than 1 ounce of gold for a total of about an hour. And then it kind of all went in the opposite direction. So the height among Gox was about 1240. The height here on Bitstamp was around 1160, 1170. Okay, and this set off a 1 year bear market with an additional, 9 months of flat market. Okay, this was a pretty troubling time, right? Because this was basically almost 20 months of Bitcoin not going up, which was very, very weird. Okay, we had 12 months of down plus an additional 9 months of stagnation. When Bitcoin finally started to go up, it went up fairly slowly, right? So from September of 2015, it took until around February. So September 2015 to February 2017, right? So that's 3 plus 2, that's 5 plus 12. So that took about 17 months before Bitcoin reached the prior all-time high. But once it did that and a little dip, we took off. Once we broke that 12,000 again, that 1,200 again, 1250, 1,300 area, we took off to the upside and went all the way to 20,000 in less than a year, right? So once we broke out of the high, we went up. We went up almost 20x from there. Went up about 15x, right? So from 1.5 thousand all the way to just under 20, right? So this goes to show you that the moment you break out of an all-time high, the FOMO really sets in, that fear of missing out. And that's important. Now, in prior times, we usually went all the way down to prior highs. Like the big bubble before the 1200 bubble was the Cyprus banking crisis. And we went up as high as 250, 260. I remember this well. That was the bubble I was FOMOing on and buying Bitcoin on this bubble. Okay. And then I watched it fall down to $50, right? We fell about 80%. So yeah, so I watched some of the value of my Bitcoin fall 80% back then. So the current environment's nothing new to some of us that got in 2013. The other bubble to 1200 went as low as 150. Okay, I was expecting 110. I was bearish throughout most of the second half of 2014, and I was bearish into the summer of 2015 as well, looking for a low in the 110, 115 area. We got to 150, and we came close to it the second time as well on other exchanges. Okay, so now let's talk about the recent run-up, right? So the reason why I like former highs being former highs being support, is because that's how it's almost always been. I'm going to draw some lines here. So right here, when we finally started breaking out, you can see how once we broke above this high of 300, we went to as high as 500. So we almost doubled in price. And then we fell all the way back to the area of the prior high. It happened again right here. When we finally broke out, drop the magnet. When we finally broke out of this area here, this 450 area, you can see how the price, again, pretty much doubled. We went all the way to almost 800. It just under doubled. And on the pullback, we fell, and pretty much like this tip was higher than that one, but we pretty much fell back to the area of a breakout. It happened again right here. The price then moved to just under 800. And guess what? After the price went from 800 up to 1,000, we went back and tested that area once again on the way down. If we take the latest one, we didn't go up much further. We only went to about 1350. But again, we went down and we fully tested the area of the prior high. And this relationship broke here. And when we have an excuse as to why it broke there. The relationship broke there because that was the area of the prior high here. When you break, this is why I don't believe in double tops. I knew that once we got back to 1250, 1300, which was the 2013 high, the next likely outcome would be significantly higher prices. Okay? Because that's just how markets work. Once you break prior highs, they tend to break out. But even so, once they break out, they still, in most cases, come back and test the area of that breakout. And in this case, it never did. We went up, we doubled in price to 3,000. And on the way down, I was all ready to watch it go and retest 1250. But it stopped short because we got segued in there. This was July 17th when the user-activated soft fork really became viable. And from there, this relationship of retesting prior highs came back. Like here it is again. I'll make the line blue for consistency. Here it is again. When we broke above 3,000, we went all the way to 5 and then back tested the 3. Um, I expected it to also happen here, and it almost did twice, right? So here's this yellow line. Again, for consistency, let's change it to blue. The high was 5,000. When we broke up to 7,500, I expected us to come back down to 5,000, and we just fell short of that at 5,400. So the 5,000 still remained untested. Off the recent high, we have fallen and we reversed right at 6,000, but there's still a little gap between 5,400 and 5,000, and the large gap all the way down to the 1,300 area. Okay, so these are our risk levels that remained untested as the Bitcoin went up. Now, I, of course, was expecting Bitcoin to top in the $7,500 area because after that, a lot of my technical analysis metrics pretty much broke down. The market started to go exponentially higher, and I attribute it to the futures, but not the futures themselves. The fact that people uh, were FOMOing over the fact that Wall Street is getting in. Here come the futures. Wall Street will either do good things or Wall Street will do bad things. But Wall Street is coming in. It's time to just buy up all this Bitcoin. And then once the futures launched, people realized that the futures aren't really doing anything, which is what my expectation always was. And I did expect some sell off on the futures, but this sell off has been very, very strong. The big question is, have we bottomed or not? And it's still a little too early to tell. And over this past week, um, I mean, my view on the market has been flip flopping back and forth. Are we bullish? Are we bearish? It's been a little bit of a tough environment. But if we can break um, above 9,000, 9,100 technically, 10,000 would be the really tricky one. If we can then get above 10,000, then by all means, the bottom is almost certainly in. And once we get back to 20,000, hopefully we get there slowly, not quickly, like it took us a year and a half to get back to 1,300. Hopefully it'll take, the longer it takes to get back to 20,000, the stronger the breakout above 20,000 will be, right? And once we get back there, I am hoping for another doubling of the price of Bitcoin, so we can go from 20,000 up to 40 and 50 fairly quickly. Because if we can get back to new highs after some time has passed by, people will rush into Bitcoin because they're going to once again feel like they're missing out, right? So now let's start zooming in once again. So right now, I am waiting for a new weekly high to give us a long-term potential entry. Now, there's a couple of metrics here. My favorite way to trade is this time indicator with the numbers. And according to this indicator, you really need to start seeing some green numbers. Unfortunately, that may not happen for a couple of more weeks. So there is my traditional trading tells me that we have this doji, and once we go above the doji, it's a potential buy point, not with all of your portfolio as a trader, but with a fair amount. Okay. Now let's go to the daily. A little busy. The daily chart's getting a little bit cluttered. So based on traditional metrics, uh, we went from an overbought condition. We went from two overbought conditions, right? So the RSI went from overbought, and it eventually made it to oversold right at the bottom. And we're now trending back up. So that's a good sign. The MACD has also crossed. That's also a good sign to the upside. Now let me make this chart bigger. These two triangles, yes, I'll do this. these two triangles, whether you were looking at the symmetric version in yellow or the descending version in red, same thing here. There's a symmetric version in yellow and a descending version in red. Both of these triangles perfectly hit their targets. Okay, the target for both of these triangles was in the vicinity of 7,500, which is the number I was looking for. Not only did we meet that target, we went lower than that target. On the way down on the daily, we did get to our 9, which gave us an indication that the market is going back up. Now, one of the things that the 9 tells us, and it's a momentum indicator, that you can have a 1 to 4 candle correction and then a reversal back to the downside to kick off a countdown. Okay, so a countdown is once you get, let's say, one of these 9s, you start counting these numbers on the bottom until you get to a 13, and that tells you that momentum from the 9 that didn't end the trend but started it has been exhausted. Okay, and that's why you get these red arrows. I tell you to be careful. So once we had this candle, which is a reversal candle, and we started going back down, below this red line, I was started to, eye bearish targets once again. Now that we're back up, I'm waiting for a break of this high in order to start looking at bullish targets once again. Okay, and my first bullish target is going to be the 10,000 area because it was support numerous times. Once we get to 10,000, let's see what happens. Are we going to reverse back down, or are we going to hang around 10,000 and break it to the upside? Okay. On the momentum indicator, even though this told me to be very cautious and start looking for targets to the downside, the numbers continued to the upside, right? So if I trusted my own indicator that I popularized, I should not have gotten scared here on the green 4, and I should have stuck with the bullish trend. Hindsight's always 20/20. This is why trading is so difficult. So now we're on a 6, and the probability of a 9 is very, very likely. Now, I would love to see that 9 come in the vicinity of 10,000 in order to call a potential reversal in Bitcoin at the $10,000 mark. All right. The 4-hour chart has probably been the most interesting. Okay. Now, in my last video, I drew this head and shoulders pattern for a potential reversal. But as you can see, we never broke down this head and shoulders pattern. So therefore, it can now be deleted because it was never realized. So it was something I was looking at for a potential target if we would have fallen below 8,000 one more time, but we never did, and we went up. So this can now be deleted. So it's interesting that the price is now reversing off another one of these 9s. Wait, let me delete that. No. So we hit another one of these 9s, and I know that my consulting clients all saw this. I did see it mentioned in the group chat even before this candle was showing up. And this candle has 35 minutes to go, so we'll still be here when, let me make this bigger. Yeah, speaking a little loud so people in the back can hear as well as the live stream. So this 9 gave you a nice sell signal here off the bull run. And I always tell people your entries into these trades take place when a candle with a green number starts trading above a candle with a prior green number. So that entry, according to this indicator, would have taken place at $8,350. And now, once this 9 starts to form, it's time to take profit from this trade at around 8,900. Okay. So what else can we see here? So also on the last podcast, I informed people that I didn't really see an inverse head and shoulders here. Okay. Now, I've gotten a lot of tweets about it since. And this is interesting. Thank you. I don't know if this is one of my clients or not, but that's a very good trend line that they drew. And they're pointing out how the 9 cell showed up almost at every point in this trend line. And right now we're dealing with another one. That was from yesterday. It might have been in my group chats. All right. Anyway, let's go back to the chart. So the reason why I don't see an inverse head and shoulders here is this. Because people are treating this area as the right shoulder. My problem with that is that the right shoulder isn't giving you a low. This area is actually giving you a low, not this area. And that's my minor problem with it. Now, on some exchanges, that might not be the case. I believe I'm looking at Bitfinex. So if I look at Bitstamp, it looks about the same. But that's what people have been drawing. So, I mean, it could be. Let me go back to Bitfinex. I'll entertain the idea. So if we do, start thinking of this as a head and shoulders pattern, the way we would draw it is, I'll make these green because it's an inverse one. So this would be one triangle. I mean, this would be the big triangle. It's still hard for me to draw this, no matter how you draw it. I mean, some people have been drawing them pretty well. But again, it depends on your exchange. And then this is the final one, the right shoulder. Okay, so if this is realized, what we're looking at is the fat part of the triangle. The low is 6,000, and the high is just above 9,000. So that's a $3,000 fat part of the triangle. So if we do break out, you are looking at a $3,000 increase off of this pattern. Now, to me, it's not all that clean, but you never know. Okay, so again, something to consider. At the moment, what I am looking at is one of my 9s, and that's what I trust. So my current outlook for the 4-hour chart is a 1 to 4 candle correction. from the 9, and then we'll reevaluate, right? So there's a high probability that this will be a 1 to 4 candle correction and back up, but it's really 50-50. But right now, I'm fairly confident in a 1 to 4 candle correction, and after that, we got to reevaluate. So ideally, we will have the 50-period moving average come up and support our price, so we go higher. It was also very important that we rebound from this area, because you never want to see double bottoms. You see how every one of these pullbacks on the 4-hour candle, uh, this one here on the 6th, then this one here on the 7th, this one here on the 8th, this one here on the 10th, and then this one here on the 11th. Every one of these pullbacks has been at a higher price. You can also see that every one of these tops has also been at a higher price except the current one. The current one came up just short, but it's close to within margin of error. So far, the picture is once again looking pretty bullish. Okay. And finally, we have the 1-hour chart. In the 1-hour chart, in yesterday's video, I drew this channel. The 1-hour chart gave you a nice 13 sell indication right here on a very clear reversal doji candle. And this candle with the red one was actually a 9 for the majority of that hour. So, and again, people in and just like this green one was also a 9 for the majority of this hour. So the indicator with these 9s and 13s giving you these arrows worked pretty well, I would say, on the 1-hour chart to get the very low and the very high over the last 2 days. So that looks pretty good to me. And right now, we're on a bit of a bearish move. So let's see if we can get a 9 in the vicinity of the 50-hour moving average, and the price would get supported by the $8,400-$8,500 area. And we'll be able to bounce from there, and this would be in line with the 4-hour chart. That's about it on Bitcoin. Just want to glance at the S&P 500. Again, the same thing. Like I had the 9 called the top and a 9 called the bottom, and you can see that in the S&P 500, we had a reversal candle, and we traded above that reversal. This is what I want to see in Bitcoin, right? So even though the numerical indicator, the time indicator, has not yet flipped color, giving you a bullish trade, there is definitely a bullish trade on the table from traditional trading that you had a doji or a hammer, and you're now trading above it the following day. Now, this can also be a 1 to 4 day correction into the 50-day moving average and then back down. But for now, this is a tradable bounce to the upside in the S&P. Here's the longer term look on a weekly chart, and doesn't look bad. This was an arrow I drew back in August, and it looks like we are sitting right at the tip of the arrow, but obviously we went way higher than I expected. But the market is still bullish, guys. We're not ready to put a fork in the S&P. All right, that's all I have. I'm gonna turn it over to the audience for Q&A. Let's turn the camera on. No more screen share. So, yep, here in LA, we have about 1,300 live viewers right now. A little late on the East Coast, pretty good on the West Coast. Yeah, I think the camera is good. We're all set. All right. That was pretty much it. I mean, you still have the screenshot on, but we have the camera there. All right. Thanks, guys. How many of you actually followed all that? Nice. Almost the whole room. Awesome. Thank you.
Q&A. So Q&A from the if anyone has questions.
Can you kind of explain like where all these numbers come from and like what the I guess there's some kind of theory behind it, I assume, right?
Yeah. So on my website that I showed, like in that section 6, let me sit down. So the theory is pretty much statistics. I mean, a man by the name of Tom DeMark came up with it a long time ago for the markets. It was very popular in currency trading, and he basically ran statistics. Okay, so um, how much momentum do traders have before they start taking their profit? And he tried it out with several different combinations of numbers, and statistically, he found that well, about 9 days of upside is usually tends to lead to some profit taking. Sometimes that profit taking becomes severe and it leads to a complete fall. And sometimes that profit taking is short term and then it kicks off another trend that acts a little bit differently. And the system became pretty popular on Wall Street. And sometimes these things tend to become self fulfilling prophecies when everyone is following the same indicator.
What percentage of people do you think when you're working in Wall Street were using this 9 count?
As far as like institutional traders, institutional traders, quite a bit. I mean, I know at least one pretty popular trading desk that uses this exclusively. That's all they pretty much use. And then they notify their clients anytime a major asset is reaching one of those milestones, 9s or 13s. And I mean, the guy that created it ran some hedge funds, and they did very, very well. So others noticed. Um, I've seen it used, and it's interesting. I've already ran into some people that have started watching me that were traders for a long, long time, and they're kind of impressed with what I've done with it in a public space and some of the minor alterations I did to it. But yeah, if you run into some old traders, um, if you ever run into traders that have been trading, long before Bitcoin existed in an institutional way, should ask them about it. Ask them if they ran across it or how they used it, because I mean, in my experience in institutional trading, where I what I never saw used was Elliott waves, but this I saw used quite a bit.
I guess many of us bought Bitcoin because it would be a non-correlated asset.
Mhm.
We've seen the market drop and we've seen Bitcoin drop together. Just coincidence?
I think, yeah.
Able to repeat the
Well,
question.
the way I answer it, it will be kind of obvious.
Okay.
So I see the current stock market drop and the drop in Bitcoin as a coincidence. Now, we'll see if some kind of correlation develops. But to me, I do think Bitcoin is an uncorrelated asset to the market. Now, I could be wrong on that. Maybe someone can bring me some, correlation statistics. But I think it's pretty much a coincidence. Now, what we might see is basically sometimes there's this like her mentality, like I'm still waiting for the bond market crash, and that money's got to go somewhere. So that money is going to go into stocks, and that money might go into Bitcoin. So that's kind of how I see it. So they could move together a little bit because, like, the bond market, especially the government bond market, that's the public sector. The stocks are still the private sector. And Bitcoin is also the private sector. Even more, it's a decentralized sector, right? Which is even more private than the private sector of the stock market. So there is some commonality there against the public sector assets. But I still think that they're pretty uncorrelated. I got a few questions there. Let's go here, then
Do
back.
you factor in volume with your estimates?
All right, so the question is on volume. I very rarely pay attention to volume. Very rarely. Because for multiple reasons. For the same reason, I never pay attention to the order book when I trade. Not in traditional markets, not in crypto markets. I do pay attention to like open interest and average daily volume, right? Because if I'm going to be trading an asset, I need to know exactly how popular it is, because if it's not liquid, then I can't go big. And if it's very liquid, then I could go big, right? So I need to know volume from that point, that statistic, right? Like um, when I used to trade in traditional markets, I never looked at any stock that had less than 500,000 shares average daily volume. That was my cutoff. I also had price cutoffs. I never looked at anything below $5. I was I needed the stock to be above 5, preferably above 10. I needed it to have greater than 500,000 average daily volume. And if I'm trading in the option space, I needed to have some open interest. Open interest is the number of options outstanding per contract. Like the volume is irrelevant to me. Like option volume can be random, but um, I never tried to have more than 10% of the open interest, right? So if I'm trading an option on a stock, I don't want to be bigger than a 10% holder of that entire option. And in some cases, I've gone way beyond that, like in some illiquid options, but because I had no choice, I wanted to make that trade. So, but when it comes to order book, I don't trust the order book, because any expert trader will not show his hand to you ahead of time. If he has a big sell order on the books, he'll probably pull it right before it happens, because he's tricking you into thinking he's a big seller. And he might even flip it right as it comes due.
The hidden orders, right?
Right. Same thing in the other direction. There's also all these spoof orders, so it's totally irrelevant. Like the order book is totally irrelevant. As far as volume goes, in rare cases, I only recently pulled up volume on a lot of my Bitcoin charts, only because I wanted to compare the bounce off of 7,000. So it's the bounce off of 7,500 versus the bounce off of 6,000 as far as volume goes. Like I wanted to see, is the volume on the $6,000 bounce significantly higher than the volume on the $7,500 bounce? And it was, which is a good sign. Because if it was the other way around, it would not have been all that good. Okay? Because if it was the other way around, that means that all the people that bought at 7,500 are getting really, really nervous, and they might actually start to sell once again, bringing it even lower. Okay? So, so that's what you want to be aware of, right? You want to kind of know how big was the buying at a certain point. Now, if we get back to that 6,000, and this is the problem with double tops and double bottoms, right? If I pull up the chart of Bitcoin, I know the live stream isn't going to see it, but you guys will. It's on purpose. So I want the daily. Here it is, right? So you can see how that giant green volume spike takes place on the $6,000 bounce, right? So clearly a lot of buying took place that day. If we get back to that same area of just above 6,000, how nervous do you think those people are going to get? They're going to start to get very, very nervous. Wait a minute. I bought this Bitcoin at 6,000. I thought it was the bottom. It went to 9,000. Clearly, they didn't sell. The volume is telling you that they didn't sell, right? So they're all holding. So as it starts to come down, if it goes back to 8, okay, goes to 7, now all of those people that bought between 6 and 76, as the price comes back down to 76, those people start thinking, well, wait a minute. Like, I don't want to lose on this trade. I was up so much money. I don't want to be down thousands of dollars per Bitcoin. Let me get out and break even. I can always go back in. And that's what happens. This is why you don't get these double bottoms. Because if those people continue to hold, you'll see those people start to sell as their positions start to go back into the red. And their positions start to go back into the red as we come back into that reversal candle. The top of the reversal candle is at 7,600. So the moment the price comes back to 7,600, all of those people have to start thinking about selling to get out with a profit. All that buying from 6,000 to 7,600 turns into selling and drops the price to a brand new low. Okay? And the same thing happens the other way around at the top if there was short selling. Or at the top, usually new people come into the market. Okay? And that's why I'm very, very nervous if we get back below that yellow line at 7,600. Because that tells me that giant green volume spike is about to do the exact opposite.
If we go below 7,600, do you think the strongest next support is the 1,300 range?
The strongest is the 1,300, but that doesn't mean that we can't reverse from above that. It basically means if we go below 1,300, the whole ecosystem will probably be in serious danger, right? Like, I am not expecting us to go below 1,300. That's my absolute floor. Now, once we go back up above 20 into 100K, there'll probably be a brand new floor, hopefully in the vicinity of 10K or so, right? But remember, right now, 1,300 is what 130 was 3 years ago when we were coming down from 1,200, right? It's the same thing. It's kind of like fractals. They all kind of repeat. So in a way, it kind of sucks that we didn't actually touch that 1,300 back then. But hey, what's done is done. But I'm hoping that once we go to 100K, that 10,000 is going to be the floor. And when we do this meetup, hopefully in a bigger room, 3 years from now, everyone will be panicking that Bitcoin is down, to so what would be the equivalent, right? If we now go to 100,000, right, or if we go to 200,000, people would be panicking that, oh my God, Bitcoin is down to 70K from 200K. How low can it go, right? It's going to be again, it will be like a similar view, right? And I'll guess what number I'm going to say. What would be the low? 20K, right? The prior high, right? So hopefully that would be it. All right. There was a question right there.
Okay, so this kind of builds upon the question that was posed earlier about Bitcoin being a correlated versus non-correlated asset. 2008 was, of course, the crash and the genesis for the birth of Bitcoin white paper. Should and if and when the U.S. economy does hit those kind of headwinds, what sort of relationship do you think that would have to Bitcoin as it relates to the economic temperature, if you will?
All right. I'll repeat the question for the video. So the question is, Bitcoin came into existence right around the last financial crisis. So what can we expect from Bitcoin if a similar or bigger financial crisis is to occur? Okay. So no one really knows. It really depends how big the next financial crisis is. Now, America, as a global superpower, is starting to push the historical, time boundaries. Superpowers and world reserve currencies tend to last approximately 100 years on average. Over the last, 500-600 years, we've had what? Spain, Portugal, Amsterdam. Well, maybe not. I think Portugal was in there. Obviously, the Great Britain had a really good 100-year run, and Italy was up there before that, but Italy had a really long run in the, at the turn of the century. So US is pushing its boundaries, though it doesn't look like anyone is really stepping up yet. The closest is China. So there's a couple of things when it comes to the financial crisis. The dot-com bubble wasn't all that bad for the global economy, especially for the global economy. It was actually good. That's like an example of a really good bubble. Gave us some good technology. Yeah, a bunch of millionaires realized that they're now broke, but they were broke right before that anyway, so it didn't really change much. And but the 2008 crisis was actually really bad. So I learned something in hindsight, of course. At the time, everyone is like, buy gold, buy gold, buy gold. So you buy your gold, you get into that bubble of 2011. Gold falls, continues to fall. It's now been what, 6 years, 7 years, barely off the bottoms. And when I looked back and I started reading more and learning, what I saw was a big crash in gold in 2008, along with the stock market. So you got to step back and think: shouldn't gold have gone up? You would think so, right? Because remember, after the last financial crisis, and again, even at the 2000 crash, gold really didn't do much. But you would think that in 2008, gold would have done well, but it didn't. Gold fell about 30% that year. Market fell about 50%, but gold fell like 30%. And the interesting thing was, now I start looking back at those articles, especially Zero Hedge. Maybe somebody saw it. Oh, the economy is so bad, things are so bad. Retired people are actually selling their gold teeth because they're like 20, 30 years ago, right? For money. Right, that's what happens, right? When your financial crash is so bad, people need to sell whatever gold they have to eat. They're not buying gold. They need money, they need food. So if the financial crisis is really bad, like the US collapses as a superpower, the money, China is rising up, and all these people lose their jobs, what are they going to buy Bitcoin with? Right? They're going to be, people might be selling Bitcoin in order to, feed their family. So you got to be a little careful about how bad the financial crisis is actually going to get. However, the good news is that the government continues to get very aggressive against cash and money laundering. So when the crisis starts to get really bad in your country, all these capital controls show up, which is perfect to use Bitcoin to move your cash out of that region. So I think Bitcoin would do pretty well if these financial crises are capital controls comes in, right? Like if it's a financial crisis to where the government says, you know what, we can't police anything, we're all in trouble, guys, do whatever you want, we're not, then Bitcoin may not be so great, okay? Because then you want food, you want probably ammo, things like that, right? So you don't want the crisis to be too bad, right? It's so interesting because I don't know, I'm still like, even though like the show Walking Dead hasn't really I don't know, I mean, after the third season, I started to get very, very disappointed. Yet I still try to watch. Like I'm not up to date. I'm still catching up. But it's interesting. I was like, the whole show is about like a catastrophic environment, right, in the future. Like forget the zombies, right? But not once in that show has money been mentioned at any point. Right? Think about that. Like when things get really bad, money isn't always needed. People care about food. So we'll see what happens. All right, questions over here.
What are your views on Trace Mayer's Mayer multiple with the price in relation to the 200-day moving average and the asset being undervalued?
I mean, so the question was about Trace Mayer's Mayer multiple and 200-day moving average. Like, I honestly don't think that like he made that up. I mean, I've seen these kinds of things like when I was on Wall Street, and the big institutional players really care about the 200-day moving average. And I remember I was even at a presentation back when I had access, well, Bear Stearns, J.P. Morgan ID. We used to go to like the Bloomberg building, awesome building, and Bloomberg has like a whole technical analysis like desk. They don't trade; they provide analysis. And Bloomberg is like the only place where you can really get this indicator, like the professional version of it. And so I was there at a presentation, at a technical analysis presentation, and the guys were talking about how they made up this new indicator, and the indicator would give you buy and sell signals based on the percentage you are above the 200-day moving average, which is probably what Tracemare is doing. So this is nothing new, and it's been used before, and it's fairly popular for longer term holders. So I haven't seen the details of it, but using the 200-day moving average for long-term trends is standard practice in investments. And Tracemare was in this investment space before Bitcoin came along. So he was probably familiar with this kind of a system even before Bitcoin, and he just applied it to Bitcoin. So it's perfectly fine, but it's not for like your active trader. It's more for holders not to be nervous too much and be aware of what's going on. Wait, that a question there.
Oh, I've always wondered on your videos what these like horizontal colored lines are.
Those are just like me randomly drawing per video. Like
on my S&P as well, though. It shows like a percentage that goes down or
wait, the horizontal. Oh, yeah. So there are Fibonacci's on here. So I recently drew another set. So the blue lines are the Fibonacci lines. So these, right? So you take the swing low and the swing high, and then it automatically draws in these Fibonacci lines, which should act as support and resistance lines on pullbacks. So you can see how it acted. Like the last one did a good job right there, but it didn't hold. And once it broke, things got very ugly very quickly. And that's what I kept saying. I kept arguing with the entire internet when people kept telling me that we're forming a base at 10,000 that we're going to reverse. And I kept trying to explain to people there's no such thing as forming a base to reverse from at the low. Unless that base lasts for years and people had forgotten about the asset, which is what gold did between 1998 and 2001. Gold made a base at 250, and it stayed at 250 for 3 years. So until countries got tired of it and started selling their gold, like London did, right? People got tired of it. A few guys got lucky. Peter Schiff and some of the other guys got lucky and bought in all of their gold at that Max Kaiser. Like that's when they like bought their gold, like in that area, like with the .com crash. So they bought gold, and then gold went from 250, all the way to like 1900. And okay, so you happen to catch the low. Let's see what you do the next 20 years. Gold could be going down for another 10 years. We'll see. You also have to realize in these assets, like Bitcoin is too volatile to notice this, but for gold to start going up, it has to start going up in all currencies. Gold is priced in US dollars. The US dollar has been dropping in the last 6 months pretty heavily against the euro and other global currencies. So gold going up in the last 6 months, it needs to go up significantly higher than the fall in the dollar. Because if you look at gold in euros, it's probably not rising at all. It's probably just staying steady. So you gotta realize when it's an inflation hedge and when it's actually a rise in the asset.
Could you explain some of your thoughts on why you think technical analysis works, in the sense of, I get it's based on statistics of past things, but it's got to be based on some element of it captures some element of human psychology maybe. And so to that, two points. One, yeah, what percentage of the market is like professional educated traders, and what part is influenced by kind of the ignorant masses? And then also, how do random news events play into that? If you're in the middle of an analysis and then some big news event happens. So yeah, I guess that's my question.
Okay. So the question was on why does technical analysis work and how do news events play a role? Well, and statistics. So I think that the majority of crypto traders are non-professional traders. But the same can be true for the traditional markets, right? The majority of traders in the traditional markets are also not professional traders, right? But there's like, the percentage is probably about the same, but there's like such a smaller number, right? So if there's like 100 professional traders in crypto and like 1,000 non-professional, the same numbers apply to the traditional markets, only at a much greater scale, right? And the professional traders will tend to trade with more money. So the professional traders do have a little bit more of an influence than the masses. I would say in crypto, the masses have more of an influence. And the reason is because the non-professionals seem to have a lot of money in crypto, when in traditional markets, like the professionals tend to have more money than the non-professionals. There's also these giant pools of money. What worries me is everyone is now starting their crypto hedge fund and they have no idea what they're doing. So they're pulling a bunch of money. I mean, maybe they'll learn. I don't know. Maybe they'll learn on the job. I don't know. Now, how do the easier question of the two, how do news events play out into the technicals? And the answer is they kind of don't. They don't because you can't predict the news. Okay, so there's two types of news, right? Like I really love what's the name? Rumsfeld, who said known unknowns and unknown unknowns, right? So which is true. In news, we have known unknowns. There was two. I love known unknowns. I can time those pretty well, except I should have been more confident and more adamant about the known unknown of the CME launch. I kind of said it once or twice, but I wasn't vocal in that all of the price rise is just hype and it's a sell the news event. That's a known unknown, right? Well, it's actually, that's a known known. You know exactly what's going to happen and you know when it's going to happen. So that was more of a known known event. A known unknown event, two very big ones in the last, I guess, year and a half, was the ETF announcement and the halving. So those are known unknown events, right? Like you know what's going to happen, but you got to figure out how it's going to react. Actually, the halving is a known known, right? Because you know when it's going to happen, you know what's going to happen. The ETF was a known unknown. You know when it's going to happen, but you don't know what they're going to say. You don't know if it's going to be an approval of the ETF or they're going to reject it. Now, I was 95% confident they were going to reject it. I don't know why on earth people were thinking that it would get approved or that it was 50-50. I thought that was completely ridiculous, right? So going into that event, people were, if the Bitcoin world thinks that it's 50-50 that the ETF is going to be approved, then they're buying into a positive news event. If you know the news is going to be most likely negative, you got to sell on that FOMO, right? So technicals or not, what is that?
You won. It says block ads and then it puts up an ad. You just gotta close it on your computer. I think.
Is my ad blocker having pop-ups?
Yeah. It's pretty
That's an awesome troll. That is a good troll, actually. So in that kind of situation, like technicals or not, I mean, it would be nice if it timed with some technicals, but you know the announcement's coming, and you can see that the people are being irrational about it. The Trump was another one of these events. Like, I remember I was doing a video, and I'm an idiot. I was doing a video like 3 days before the election. And I'm like telling people, like I've been, for 6 months prior to that, Trump is most likely going to win. And so there's two things going on there. And then people are telling me, you know, that like you can go to a Bitcoin betting site, you can get 7-to-1 odds by betting on Trump. And I had confidence that he was going to win, and I couldn't believe that it was 7-to-1. Now, like an idiot, I didn't make any bets. Could have easily collected 7-to-1. But even so, right? The market going into the election, every time Trump would take the lead, the market would crash. And every time Hillary would take the lead, the market would go up. And I would be screaming at my podcast going, how dumb are these traders? Trump is a capitalist. He's good for business. He's good for the private sector. He's going to lower taxes. Why is the stock market crashing when Trump's leading? Hillary is going to tax every business to death. That's the stock market. Like, it didn't make sense to me. So this is, again, another situation where a known news event with an unknown outcome can help you, because you're looking at, all right, the stock market is crashing. Trump's about to win. But if he wins, within 24 to 48 hours, the private sector is going to realize how good it is to have Trump in office. And the stock market just shot up through the roof right after Trump won. And it was down like 1,000 points that night when he was winning the election. I don't know if you guys remember. So when you have a handle on the news, it can trump technicals, but you can make money on that. But you got to have the confidence that you understand better than the masses and have the liquidity not to get stopped out. So, you want to add to that?
How do you handle the forks then? Because we got a known fork of Bitcoin private coming. And do you factor that into?
I just found out about it this morning.
Okay.
I mean, okay, well, actually, I'm gonna talk about that one too in a minute. The other fork, how the fork in October was gonna, September was gonna play, August was gonna play out. So the unknown news, like a random news event coming out of nowhere, there's nothing you can do about that. But if you're a consistent technical trader, the unknown news is 50-50, but the odds are already on your side, right? Because this is why you're doing technical trading. So half the time it's going to help you, and half the time it's going to take you out. You just have to live through them. You have to survive enough of these unknown events. Like the greatest trade I ever made was on one of these events. I left a few options. I had like some call options on some stock left over from a trade, and these options were like I could have sold them and made a few $100, but they were like, I already made money on the trade. I made good money on the trade. And I'm like, all right, do I really need a few extra $100 on this trade that I already made a few $1,000s on? So I'll just like leave these call options, like let them just expire worthless. Like, who cares? Like, I didn't bother. And then I'll wake up the next morning. I was actually in Asia, so it was like 11 at night. And I open up my broker, and I'm like, I think my broker made a mistake on my account balance, because all of a sudden my account balance almost tripled. Company got bought out for 50%, double the price. And I had these like call options that were like, I wish I had more of them at this then, right? I only had like 4 or 5 of them or something, right? I'm like, oh my god, like each option went from being worth a few $100 to being worth thousands of dollars. It was a small account, so I'm like, damn, I really wish I had a bigger account so I had more options. So these random events can work in your favor. I know it feels like bad luck and they're always going against you, but if you were trading consistently, these unknown events would go in and out. As far as like trading the technicals goes, I always say there's like 3 types of traders. There's the fundamental traders that either make the news or you know, they know the news ahead of time. Watch Billions, awesome show on Showtime. Watch it. You have 2 types of technical traders. Technical traders that found a statistical niche that only they know, and only they follow it. And the longer they keep their mouth shut, the more money they're going to make. Or you have the traditional stuff where you almost hope that you're moving with the crowd and everyone sees the same pattern and everyone jumps on that pattern and you recognize it immediately. So sometimes an obvious pattern is a good thing because you're moving with the herd. So in this type of trading, I kind of want to move with the herd and spot these like actual patterns that other people are watching, and I might be potentially influencing these patterns. But in my options trading, I do the other one. Spend 10 years trying to find a little niche that no one else uses, and some traders never find it. But that's what I'm doing right now. Found something that works, keep my mouth shut, and trade it. Once every 3 months, but trade it nonetheless. There was a question.
The question on how do you handle the forks?
Oh, the forks. So what happened on that the 2x fork? Uh, People were buying up Bitcoin in order to get the fork coins. People were taking them off exchanges because they didn't know what exchanges were going to do. So when a fork's coming, you also consolidate your coins. I think my coins are still fairly consolidated because I consolidated all my coins for the 2x fork, which never came. So my coins are somewhat consolidated. But other than that, yeah, you try to have some Bitcoin the day of the fork, and then after that, you can, liquidate them again. But I think the big forks are done. Like Bitcoin private, okay, who's the developer? Correct, right? Like, do you know anything about that coin? Like, again, like, I'm not, I don't touch the fork coins until I know I can make 5%. Until I know I can make 5%, I'm not going to sell. Like I sold all my Bcash at 10%.
It was trading the news. Yeah, okay, we've got a fork. We're going to have people getting excited about it, and is it going to impact?
Yeah. So on this fork, this Bitcoin private, which names did they get to pump it? And who are their developers? I mean, those are the only two real questions, right? I mean, that's the only thing that will make your fork short-term viable. You have a name as a developer, and you have a name as a promoter. Bcash did well. They had Raja Veer, they had Jihan, they had, they have one or two developers that they, bring out on stage. I think Jimmy Song is going to be debating one of them in Acapulco. That's why he's going. Actually, they only have one, that Deaded Linux guy. I don't know. But they also have those other guys, Peter R., Andrew Stone, from the Bitcoin Unlimited team. It's kind of like the same people, right? But all these other forks, like, who's the developer? I can name you one or two developers of Litecoin, all of whom are actually Bitcoin developers that want to test some stuff out. I can name you one Monero developer. We all know him, Fluffy Pony. Yeah. Who else we got? Like these other coins. Who's their developers? There's nothing there, guys. It's a fancy.com, no backend. There's nothing there.
Is Ethereum a scam or not?
I think it is. I always thought it was. I mean, when 7 of your 8 co-founders are no longer with the project, the day that it launches, after all the money comes in, I mean, what do you call it? Surprised there was one left.
Can Bcash just copy and paste like Lightning Network?
No, because they didn't get SegWit.
They could get a malleability fix and implement it pretty easily, right?
They could. They need to fix transaction malleability. Who's going to fix it, right? Because transaction malleability is inside the SegWit code, which is pretty damn complicated. So it's most likely Bcash doesn't have the competency of developers to pull out the transaction malleability fix from inside SegWit to add it to their code. Not to mention, maybe they'll have controversy within their own community trying to get transaction malleability because, well, wait a minute, you told us that we need to scale on-chain, not off-chain. So they're going to have dissent within their own ranks trying to get Lightning onto Bcash.
How do your technicals theories work on other coins? Like, for example, if you were to apply it to Litecoin or to these other altcoins?
Not, I mean, probably not as well, but oh, the internet's gonna be so upset at me if I start pulling up altcoins and they don't see it. God, that would be that would be the equivalent of my ad blocker giving me pop-up ads, to me trolling my own viewers right now. But
Sorry for asking the question.
no, it's fine. I'm just gonna grab a few of them, right? So,
You can do EOS.
I've never looked at EOS, but since I'm in a good mood, let's make a copy. EOS daily. How long has EOS been around?
Like a year-long ICO.
It's still in beta.
Well, it's not in beta if it's being actively traded by you by 13-year-olds, right? Okay. What exchange is it most liquid on? Really? Is Binance compatible with TradingView? Let's do it. Well, you tell me, right? I like this. I had a 13 here, 9 here. It's unfortunate I had a one-off candle because, like I tell people in my videos, it's really like a 9 momentum. So I've said this many times, when you have a one-off candle, I kind of check other exchanges, because the way the math goes here, the close of this candle needed to be higher than 4 candles earlier, which is 1, 2, 3, and 4. So if only the day ended on a different hour, this could have been a green 6 number. So I always think of it, if as I see these things, I go, okay, 1, 2, 3, 4, 5. What if that was a 6 if it closed 1 hour earlier on the candle? And maybe it was a 6 on other exchanges. And then you have 7, 8, 9. But that's a little cherry picking. Other than that, I would, on the way up, let me see if there was any hints on the way up. I mean, this 9 also gave you a nice little dip. This is a support line. This is the 50-day moving average, which seems to be supporting the price fairly well. And you have a breakout of a range. I don't see much else. I mean, now we're coming down, and if we fall below this 50-day moving average, I would be looking for a drop all the way to the prior high. If I go to a lower level time frame, like the 4-hour, now we're being repelled by the 50-period moving average. This is known as a death cross, which doesn't lead to many good things, because the last time that happened to the opposite side, look for when they crossed to the upside, and that was actually way a long time ago. Let's put it that way. So that's a pretty bad sign on a 4-hour chart. So this asset is not looking very good right now. But as far as my metric, as far as oh yeah, I mean the token itself is obviously a scam. But I mean, just because it's a scam doesn't mean that you can't profitably trade it. And I never have a problem with anyone trading any asset, My problem happens when people start telling me what a great of an investment it is. That's when the problem comes in. But I remember when I was looking at load chart, when this, that was the Ripple ticker. Like here's the daily on Ripple, right? And if you were paying attention to the syndicator on Ripple, I mean, this is basically the only 9. This is the BitMax. This happens to be like the BitMax future, but that called the top perfectly. And even if I go to I think I have to go to a weekly on a different exchange, but these were the most liquid. And here's the 4-hour, and this one is actually more recent, I guess. Here's the 4-hour, and this is recently. I see a 4-hour. I haven't looked at Ripple in ages, right? But here's the 4-hour Ripple. Oh wait, or this. Oh yeah, this is February, right? So, man, if you were trading this indicator on Ripple in the last week, I mean, that was a nice buy signal. That was a beautiful sell signal. I mean, I wasn't looking at it. I'm looking at it for the first time. I just knew that at the time of the all-time high, I also had, the arrows are automatically created. Excuse me, guys. And like again, this is why I like the syndicator, because it really helps time the very tops and some of the very lows. But Ripple was a great example of how the syndicator tends to help you. Well, there's another one on the 4-hour chart. And trust me, not a lot of people were trading this thing on Ripple at the time, especially. I don't know. I can't explain how it works. It just like it. I found it very useful in my traditional trading. Even if I change like the XRP to XRP BTC on, yeah, let's do Bittrex, and I go to weekly. You can see how maybe it was a different exchange. Again, I have my one-off, right? Like when it's a one-off, I always think, what if it wasn't 7, 8, 9? But maybe it was another exchange. Maybe it was Poloniex. No, not great, but I thought I had one where these arrows were very close to like the start of the up move. I don't remember, but I remember pulling it up. And I remember one more. I know, like, and a lot of them are just like crazy assets, right? Like even I think I have them because like other clients have asked. Like I think I have a Tron. Like again, another scam, obviously, right? We all know that. And like here's the daily Tron, right? Like there it is. Again, you have a and what's the Zcash ticker? Oh wait, I might have it saved. Hold on. Well, let me see it more recently, right? Well, more recently, it's actually on a buy, unfortunately. No. God, no. I mean, you can short-term trade it if you see a pattern, right? I mean, you can trade whatever you like. Here is Zcash daily, and you know, right there. You can like pick out these big turning points. All right, next question.
What's the argument behind the aggressive 13s?
It just basically it gives you a slightly looser condition And like the countdown starts. You know what? Let me pull up Bitcoin. So let me get like an example of one of these guys. It's just another point of interest. I need like a clean countdown. Here it is. So so this 9, when the market continues to go up after a 9, it starts this countdown along the bottom. So while the setup, the numbers on top have to be consecutive, the numbers on the bottom don't have to be consecutive. And the rules are, in order to get another consecutive number, your close of the candle has to be higher than the high of the 2 candles earlier. So you can see how the close of this candle is lower than the high of the 7 until you get to this one here, where the close of this candle is higher than the high of 2 candles earlier. The aggressive simply compares high to high. So it's just a looser condition on the countdown of additional strength after a 9. So the aggressive will tend to be earlier than the normal 13. There's also the combo, and the combo is the normal 13, but it begins when the setup to a 9 begins, not after the 9 is completed. So that's the difference in the combo. So it starts counting the countdown and the setup off of the first candle. And if you never make it to a 9, then it doesn't go anywhere. Then it like cancels. But if it makes it to a 9, you should already be a couple of numbers in to the countdown. That's a good question. In traditional markets, they mostly pay attention to the standard sequential 13, with the other ones being something to keep in mind. Now that I put the aggressive in here, I'm finding that the aggressive 13 looks pretty damn good on Bitcoin. But we're also, some of the documentation on these things is a little lackey, even like in the textbook and stuff. So, and there's multiple, like, again, there's perfected 13, regular 13. We now have the deferred, which is the perfected side of things. So you get these pluses. Do I still have the 4-hour chart up? So you get these pluses. So there should have been a 13 right here, but because this 13 wasn't lower than the 8, it kind of defers it until it is. But now they all just disappeared, because once you got a 9 in the opposite direction, it cancels out the bearish countdown. So this was technically a 13 right here, normal one, but we were waiting for the perfected version. And the problem happens on the aggressive. There's really no documentation if there should or shouldn't be an aggressive. So, if there should or shouldn't be a perfected version of the aggressive 13. So gotta spend some time. You gotta see which one tends to fit better. Ideally, you wanna provide all of this and let the trader decide what they deem as important. All right, let me stop screen share, and then we'll get back to QA. Hi guys. All right, next.
Is it feasible to create a trading bot that uses the time indicator?
Yeah, it's feasible. If you come up with your own rules. I mean, I have my own rules. I've been meaning to put one together with my developer, but we're both busy. It's feasible, but in all of these, again, in my experience, trading bots eventually break down and they start to lose you money. Because in every one of these cases, there is lots of little conditions, and some discretion needs to be made. Now, sometimes a trading bot's very useful because it makes you disciplined. But it's really hard to get every kind of minor detail in there. But yeah, it's totally possible. My trading in the options market is very mechanical, but I don't see myself putting a bot to it, even though I know exactly what I'm doing. I know exactly when I'm going to do it, but I'd rather do it manually than let a bot do it. Also, if you're going to do a bot, you better write it yourself or a close relative that you trust. Like letting somebody else write your bot, if it's profitable, one of the reasons why they usually fail, right? Because if it's profitable, then your coder wants to use it. And then who knows what else he's going to do with it. So you got to be careful about writing profitable bots. Question back there.
Yeah. I was just gonna ask, like, what the standard protocol for exiting your position on a 9 is. Do you wait for the next candle to dip below the close, or
no, no, I got the question. So the question is the protocol for exiting on a 9 if you're already in the trade. So I'm a big fan of reversal candles. As you know, you attended my my seminar. So the moment I see a reversal candle, the candle before, on, or after my 9, that's when I seriously start to look for an exit. Or if I'm really happy with my profit, I'm going to take some of that profit. So the only time I don't exit on a 9 is if the 8 candle is not showing me any sign of a reversal, and the 9 candle starts with no sign of a reversal and just keeps going in my direction. Then I'm not in any rush. But at first sign of weakness, at the end of the 9 candles time range, like sooner, I know when the 9 candle is going to end. Like I know when it's going to flip to the next candle. So as I notice weakness in that 9 candle, I start taking more profit. If I start seeing weakness in the following candle, I start taking more profit. When you have a reversal candle on or near a 9, and the following candle is now trading in the opposite direction of the 9, like reverses, whether to the up or to the down, that's when you start eyeing the opposite trade, not when you're exiting. You should already be fully exited by then. Okay? Make sense?
Yeah, thank you. So I was wondering your thoughts on Robinhood app going live with like over 1 million new users this month, if it'll have any meaningful impact.
I don't think so. I don't think it will. I don't think Robinhood app ever had any meaningful impact on anything, right? Because even when that app was live in traditional markets, if you have any kind of money, why would you be using that app, right? Like commission fees are tiny. If you are on a Robinhood app as a trader to save on commissions, that's bad. Like 1 million users, I bet you the average user has about $100. Like it doesn't do anything, right? I mean, it's great. They have great numbers, right? But they're never going to have big volume because anyone with any kind of significant volume to actually matter, they're not going to. They're going to trade on a real professional platform in front of a computer. Question? We go there. Go there.
So just want to ask Tether. I mean, there's a question of it itself and scam and this and that. I mean, I wouldn't put my money in it, but just if it does fall at some point, how does that affect Bitcoin's?
We don't know. I mean, I happen to think that the elimination of Tether is long-term good for Bitcoin. Because now all of these altcoins are going to be forced to trade against Bitcoin and not against, a fake US dollar. So So I think it's good. It'll also clean up the system, right? Like you want the garbage out of the system sooner than later. So I think the fall of Tether would be a good thing for Bitcoin in the long term. In the short term, people might panic. But it was funny when Tether got hacked and the price of Bitcoin dropped. And I remember sending a tweet making fun of these people. Okay, so Tether just got hacked. People panicked. So what did people do on their altcoin exchanges? Sell their Bitcoin for Tether? Right? Like, what do you do? And when all of us started making fun of that, you saw Bitcoin immediately reversed because all these people realized, wait, what am I doing? So it's hard to say. Yeah, I know Bitfinex has this theory that they're printing Tether to prop up Bitcoin. Well, clearly that's not true, right? Bitcoin has fallen, 60, 70%, while they continue to print more and more Tether, right? So that correlation definitely broke down. So I don't think that's it.
Maybe the correlation between institutional investing entering the Bitcoin market, the current level and price, but the threshold at which I think there was quite a bit of in the sentiment among institutional investing and larger entities is not as maybe we are sitting here in this room. And at what point do you think those entities would want to enter that space in order to take advantage of it as a hedge against other assets that they may currently own?
So the question is on institutional investors getting in. So the word institutional investors is not very clearly defined. Okay, so the big institutional investors are not in. Now, only hedge funds are in. And while hedge funds are institutional investors, and a lot of the hedge funds are pretty damn big, pension funds, they're not in. Retirement funds, they're not in. Southern wealth funds, maybe thinking about it. They got a lot of regulation on them also. So just the hedge funds. I don't think they're in that big, to be honest with you. I mean, they might be in big for the crypto space, but they're not big based on global capital space. When are they going to get in? Well, I don't know. How long are we going to keep going down? So clearly, if they got in on this low, the volume would be significantly higher. Also, you probably wouldn't even see this volume. They're getting in OTC. They'd buy them directly from the miners. They wouldn't go on these exchanges to buy it. They'd buy it directly from some sources. And they're longer-term investors. They're not flipping. Not this asset. It's too illiquid for them to flip. So they would hold on to this thing for a couple of years.
And even, I guess, even by
none of the government, if you're an institutional investor in any way connected to government or government employees, you are not in this thing. There's no way you can take that kind of risk.
How do you see building upon that question, the recent Senate hearing? How do you see that? Is that a trend opening the doorway for more institutional down the line? Is that setting the framework to build upon for the future?
I mean, I really think the Senate hearing is more interested in ICOs than it is in Bitcoin. I think ICOs pose a much bigger threat, and ICOs are a lot easier to deal with. So they are going to go after the bigger, lower-hanging fruit of ICOs before they get back to dealing with Bitcoin. That's kind of how I see the recent hearings. So Now, to understand what's going to happen with Bitcoin, you want to go back to last year's hearings of money laundering laws. Those are the hearings. Like you want to go to like the criminal money laundering laws, like drug laws, those like tax evasion. You want to go to those hearings to understand what's going on with Bitcoin. The recent Senate hearings, that's all ICO stuff. That's where that's going to go, because they want to make sure that companies don't just give up regulated markets and start ICOing like actual companies, because that can't happen. I mean, and the government doesn't want it to happen. So that's where I think the focus is going to go on that front. And yeah, it'll get cleaned up quick because they're all centralized ICOs. I have no idea why they think they're going to do with this.
Yeah, there's one theory that was raised by this forensic group that was tracking the initial increase in the price of Bitcoin to a specific whale as well. And then apparently there was a similar attempt to try to focus on the downside of some of these Bitcoin price changes. Do you think that's a major factor, or do you think that there's a group of pump and dump type people who like to mess with Bitcoin pricing?
I don't think there's any kind of conspiracy that there's a whale behind it all. I don't. Caleb? Yeah, but he didn't really control he didn't have anything to do with the 2014 bear market, right? I mean, markets top when the last person to buy bought, and markets bottom when no one wants to sell anymore. And then they go up, and then momentum brings itself. I remember that bear whale incident back in 2015 that dropped the price severely at the low, and it actually caused the bottom. That was like almost a low. A lot of these whales don't know what they're doing. I don't believe in manipulated markets. I believe that you can have short-term manipulation for short-term profits. I don't believe that anyone can manipulate a market on any kind of sustained long-term basis. There's always a bigger whale, and most of them don't really know what they're doing anyway. So I don't believe in the perpetual manipulation of gold down. I don't believe in perpetual manipulation of stocks up. And I don't believe there is some smart whale that's causing this. It's just a trend, right? And look, we're going down.
We're meant to.
I got 3 here. I got 4 here. All right, let's go out to the back because you haven't asked one yet.
Can I follow up on that?
Yeah, go ahead.
Do you think maybe the miners manipulate though? Well,
I don't think so, because the miners are all independent and they're all like going against each other. Like Ampool and Bitmain, they are the biggest miners. And if they had any kind of control, I'd be sitting here. I wouldn't even be here. I would have leave the market because Bcash would be in power, right? Like we have the biggest miner and Bitcoin.com, like together, trying to push Bcash. And I think it's on the verge of a complete collapse, right? Like, so how much power do miners have when the biggest miner accepts only Bcash for its miners? And Bcash is still almost at the same price where I sold it. It's like 0.14 of Bitcoin. I sold it at 0.1. Okay, yeah, it went to 0.25, probably because some big people sold their Bitcoin to buy Bcash to kind of try to prop it up. They could, and that's what I mean. Sure, they can cause some kind of short-term manipulation that gives them a short-term advantage, but that does not lead to long-term price appreciation or declines. If miners had that kind of power, Bcash would rule the day right now, but it clearly isn't. Okay, get your hands back up, guys. All right, let's go. All right, all of you guys already asked the question. We'll go from right to left. So,
How does
my right.
Bitcoin transaction volume affect price in the sense of like buying real goods or paying salaries, that sort of thing? In the sense of, I want to feel that it makes the Bitcoin price go up, but can't people just buy Bitcoin, make the transaction, get out? What's the rationale that would, or what's the motivation that would make people hold Bitcoin, like large amounts?
Well, again, aren't you holding Bitcoin long term? I don't know if it's large amounts, but it might be large for you, right? So what's your motivation, right? It's the same motivation for everyone, right? So let me assure you. So the two people that are sitting here that paid for my seminar in Bitcoin, you're causing the price of Bitcoin to go up because I don't sell Bitcoin very often. I try to hold on to it as long as possible, as much as possible. I try to accumulate more Bitcoin, right? So if you are going to pay your employees in Bitcoin, are these employees going to immediately sell it for cash, or are they going to hold on to the Bitcoin? If they're going to immediately sell it for cash, don't pay them in Bitcoin. If they're going to hold on to the Bitcoin, then you pay them in Bitcoin, right? So you have to understand the other side of the transaction. If the store you're walking into and you want to support the Bitcoin ecosystem because that store accepts Bitcoin, the first thing you have to ask that merchant, well, what are you doing with the Bitcoin? And if he says, I don't know, it just goes to BitPay and the money's in my bank, you don't pay him in Bitcoin because you're selling it on the open market, right? So again, it depends on what happens on the other end, right? If the merchant tells you, oh man, I hold on to it as long as I can, I have some employees that want me to pay them in it, I'm trying to convince my suppliers to accept Bitcoin, yeah, that's the merchant you want to pay in Bitcoin with. That helps it go up. Paul Puey, CEO of Airbits, he had a good idea. He was like trying to so more Bitcoin companies should commit to paying salaries denominated in Bitcoin, at least some portion of it, right? This would probably force the company to hold on to that Bitcoin because they already owe it to their employees, right? So I will pay you 0.1 Bitcoin for a month for the next 6 months. So the company probably needs to have some reserve in order to meet that in case the price goes up through the roof, right? If it goes down, they can hedge. So that kind of creates more of a hodl mentality from both sides. We go there, and then we're going to come up there. Yeah.
I don't know if you've come across the article recently which mentioned that the market cap of Bitcoin being larger than the cap of the SDRs will lead to central bankers with the G7 to start investing into Bitcoin as part of their portfolios. Have you run across that at any?
No, it's somebody just speculating. I mean, it would be interesting if if a small fraction of Bitcoin gets added to the SDR, but like, why would the government want to do that? Why would they want to legitimize Bitcoin, right? Like the futures and the CME have legitimized Bitcoin pretty damn well. Thank you. Why would the government want to legitimize Bitcoin even more? So I don't see that coming anytime soon. I just don't.
They got Satoshi's million. They got Satoshi's 1 million sitting in the bank.
Yeah, well, they don't. Nobody knows where it is. But yeah, in the market cap of Bitcoin, like so many Bitcoin have been lost. Satoshi's Bitcoin probably isn't moving. Like only like 10% of Bitcoin is out there being traded, drives the whole market cap. It's just not a good metric. It's even worse when you compare Bitcoin's market cap to the total crypto market cap, because somebody creates 1 billion coins, sells 3 of them for $1, and boom, he now has like Ripple. All right, here.
Related to some of this, what do you think about Bernisky talks about a lot about network value transactions, the MET ratio?
I haven't looked into that too much.
Okay.
I haven't looked into that too much, so I don't really want to comment.
What do you think about that Elliott waves? I know you said the institutional investors are not too big on that. My personal view is we're at the beginning of a wave 5 right now, and that wave 5 is probably going to end somewhere around 40K by summer. And how much do you take that into account in your analysis?
Well, since it's a Elliott wave assumption, I take that I take that 0% into account of my analysis. But here's the daily chart, right? Okay, guys. So for those of you on the internet, the question was, if we are, well, potentially we're in the beginning of a wave 5, that's going to take us to how far?
About 40.
About 40. Okay. So in order to assume that wave 5 has started as of a week ago, correct? Right? We need what? According to Elliott waves, it's 3 down, right? So this is 1, this is 2, and this is 3, right? And they're about the same size, right? So that seems to fit the Elliott wave concept. Now, how do you know that we're not going to get a lower low? And then sometimes I've seen Elliott wave go 5 down. Does Elliott wave ever go 5 down? It can, right? So right now, if your Elliott wave is telling you we're going up on the 5th wave, if we make a lower low, your Elliott wave will now adjust and say, oh, my bad, this wasn't the 5th. The 5th's coming eventually, and now we're on a 4 of 5. And this is why I don't like it, because it changes what happened in its history with an additional point of data. The mark counts don't do that. Like the 4-hour, which was, well, the 60-minute was also very useful, and especially the 4-hour, sorry, which I adjusted, right? So the 4-hour just got a 9. Like, this will still be a 9 a year from now. It's not going to change. And the reason why I don't like Elliott waves is they change. So I don't factor them in. Oh, wait, I totally didn't do screen share, but that's okay. The audience saw it. Sorry, guys.
Bear with us.
All right, how much time we got?
Well, it's up to you. I mean, we've pretty much gone the time, so.
Oh.
It's up to you. Any more questions? I think there's. Can you handle 2 more questions?
Yeah, we'll do 2 more. We got one up here. I don't think you've asked one yet, and then we'll go up there.
Before you use the mark indicator, like what did you like to use before that? Like kind of going your past trading.
Everything else on everything else that you see on the screen. All I did was add the mark into it. So all the triangles, the moving averages, especially the candlestick reversal. See that doji right there with the 5 on it? I mean, boom, I would go short at the bottom of that doji. Okay. Yeah, I would use everything else that's in the screen.
Use like MACD and RSI.
Sometimes. They were my primaries. They're always lagging. I prefer candles themselves. Wait, well, up there, and then if that one's quick, then we'll do one more.
Yeah, what are your thoughts on atomic swaps and decentralized exchanges and coming around the next 6 months to 12 months and how that's going to affect price discovery and all that?
I mean, I don't think they're necessary, right? Because I don't believe that these altcoins are going to be with us. So if we have Lightning on Bitcoin and we have, scale and microtransactions, I mean, the only useful thing with these altcoins is just trading them. And sooner or later, people can get tired of it, right? I mean, you're trading these things, and as they get hacked. Decentralized exchanges? I mean, people don't want decentralized exchanges, right? People want someone to complain to. I mean, who's gonna, I don't understand why decentralized exchanges. Who's gonna maintain it? Like, how do you again, right? Like, Bitcoin works in a decentralized way because of this, three-way tug of war between developers, miners, and node operators. And they all have their own incentive that makes decentralization work. Like, I don't understand how a decentralized exchange would work. I mean, the atomic swaps I can understand, but again, like, if there is too much volume and the system doesn't, for atomic swaps, isn't scaling very well, like, who's gonna want to be responsible for it? Where's the incentive? Where's the financial incentive, right? If there's a cut from every contract, where does that cut go? If that cut goes to a person X, then that person X is liable for the exchange, for the decentralized exchange, right? Like there's all of these little like holes. Like, how decentralized is it really going to be? The only way to make it decentralized is to create a financial incentive, like what happened with the mining system. Because Bitcoins get created out of thin air by the code, so there's nobody in control. So unless you want to create a whole new currency that gets created out of thin air to maintain your decentralized system, but again, who's making that money? So I think there's going to be lots and lots of problems with these decentralized exchanges, because I can't see them actually being decentralized, other than people telling you they are in order for you to fund them.
Yeah, as far as like potential conditions that might reduce the amount of volatility in Bitcoin pricing, do you ever see the possibility that the exchanges would adopt a cutoff point in which they stop trading after a certain amount of percentage of increase or decrease?
No, that I don't see that, because again, you need to have every exchange be on the same contract, and good luck getting everyone to agree, right? Unless you have one central exchange in control, which is what's happening in traditional markets, right? Now, traditional markets have a cutoff switch at 10%, only on the downside. On the upside, you can go up forever. And that came about because of like the 1987 crash and all that other stuff. But yeah, I don't see that. Like, what exchanges should be more concerned with is like spoofing and well, like that's easy to stop. Like, it's always said, like, if you really don't want garbage in your order book, just do two simple things. Create a very tiny fee for canceling your order, something that doesn't affect 90% of your traders. Like a tiny fee for canceling your order. And this way the bots won't be able to throw orders in, cancel them, throw them in, cancel them. Or, you allow a person to cancel, 5 orders a day, and after that you get a fee. Just to prevent the bots from throwing orders in there that they don't want to put in. And you put a time limit on how long an order has to stay on the book, like a second or two, right? Even like 2 seconds, right? Because if you throw an order in there that's kind of very far away from where it's trading, then no one cares about that order anyway, right? So you got to throw your order in that's so close to your current price that it's actually affecting the market, and then you take it off quickly. So you force them to keep the order on there for a second or two for a possibility of getting filled, and you start charging them a tiny fee for canceling that order. And now all of your spoof bot trading is gone. That's something the exchanges should probably implement, because apparently the traditional market is having a problem implementing these rules, right? As well. But they have like, pressure from, like the Goldman Sachs in the world that probably doesn't want to do it. Because they're probably profiting from those writing those bots. But in the crypto space, hey, you want to be a leader in the exchange space? Put these things in. Then you know all your volume's legit.
The wash trading, though.
Yeah, that's if you have an honest exchange operator, that wouldn't happen.
Yeah.
All right, I think on that note, thank you. Before I cut it off, I guess.
Before you, I'll just say thank you to your audience as well before you.
Yeah.
I just want to say thanks to Tone Base for trying a new format for his
Yeah.
live market analysis. Thank you to Tone's live viewers on YouTube for bearing with us, and thank you all of you for coming out and supporting the event. All right, thanks, Tone.
All right, thanks, guys. I shared the chart with my audience again. Look, wow, this is that was pretty good. Look at that.
And
Look at that 9.
one last thing, Tone, I know you have background from Russia, so here's a vodka.
Oh man, thank you. Thanks, guys. No, we're actually gonna drink it here. I fly out in the morning. I'm not gonna take it with me. We're gonna...
What? You're gonna go to another country, or?
Well, no, I'm flying within the U.S., but I'm not gonna let me on the plane with this.
Oh, they don't?
I don't check bags. I travel too much.
Oh, really?
I guess I might have to because I have like a couple of bottles of wine. Yeah, I might have to check it. All right, I'll check it.
Yeah.
All right, you guys are making me check a bag now. All right, cool. I'll do that.
Thanks,
Yeah.
guys.
Thank you.
Awesome. I hope the audience liked it. I think it was great.
Yeah, they liked it.
Cool.
All right, guys. See you all on the
Thanks,
next
guys.
one.